Are you looking to leverage the use of smart contracts, aka cryptocurrency, for raising capital, but you don't know where to start? Rest assured, this video is going to break down examples of how people in the blockchain space are using cryptos for trading, but also smart contracts for businesses to raise capital. And what we're going to do in this video is we're going to break down how this can help you moving forward. Sean Kozak here, tuning in again with NeuroStreet. And for the world's best trading education and strategies, hit that subscribe button and make sure you turn the notification bell on so when we put out content like this, you can get results. Last but not least, don't forget to hit the thumbs up button. That way we know you're engaging in the content. Let's get started. So a couple things I want to talk about today is, and we're going to put this up here because we're video 3 in the series, is we're going to talk about smart contracts and what they are and how to use them and why they're important, because trading and investing in cryptocurrency in the blockchain space is not just about active trading. There's a lot of other moving parts that you could be leveraging, especially if you're an individual or a business owner. We're going to talk about real-world comparisons to give you examples of how other people and companies are leveraging the use of smart contracts. And then last but not least, we're going to do a deep dive on Ethereum. And many of you guys have probably heard about Ethereum. Some of you are probably wondering, okay, what is Ethereum? And is it a crypto that I can trade? And what else can it do? But the thing is that it's not just an asset or a coin that you can trade. It's also a platform that actually opened up the game for a lot of other crypto players to be able to launch other coins and do a lot of other things in the smart contract space. So rest assured, this is a video you don't want to miss. Make sure you're taking notes. Let's jump onto the screens and get you started. Okay, traders, in this video, we're going to be breaking down Cryptocurrency Explained Part 3. And the main topic for discussion for this video is smart contracts. We're going to pick up where we left off with the last one on distributed ledger technology, and we're going to bridge the gap with going over what a smart contract is and how it's relevant in the space. Now, a couple things on the agenda. Okay, we're going to talk about what a smart contract is. Why are they important? Some real-world example. I want to talk a little bit about what Ethereum is. It's a pretty important concept. And then the ERC20 protocol. So, as I mentioned, we're going to get into the trading and we're going to get into the platforms and the day trading strategies and the investing strategies and just understanding how that all works. But the main thing is it's really important you get a foothold in all of the different avenues of discussions and deep dive concepts in this space before we start getting into the platforms and start trading it. Especially if you're going to open up an account and get cryptocurrency in a wallet and sort of speak. You definitely want to understand some of these things. Okay, so the first thing I want to do is I want to make sure that you understand what a smart contract is. And basically, essentially, it's a contract that allows for a different type of protocol. It's a programmable transfer of value. It's self-executing contracts, and there's no need for intermediaries, okay? So simply said, a smart contract is a protocol for regulating agreements. Okay, it's intended to contribute, verify, or implement the negotiation of performance of a contract based on pre-programmed parameters. At first, assets and contract terms are coded and put into the block on a blockchain. And then this contract is essentially then distributed and copied throughout all of the nodes or participants of the platform. Okay, so each contract has an event which can be transferred as a trigger for the contract to execute in accordance with the terms of the contract. In other words, the application that is built on a blockchain continuously checks the commitments of the contract and executes obligations automatically. Now, I was just reading that because I made some notes on this so I could kind of give you some perspective on this. And, let's kind of put things into perspective, okay? When you have a contract, and you go to a lawyer and you draft up a contract for something, right? In business, we have contracts all the time. Non-disclosure contracts, service contracts, anything of the nature, right? It's a binding agreement. Well, like any contract, in order to have an agreement that's binding, the self-executing program will need to be subject to the contract. So the main goal here is what we're doing is you don't need to have other intermediaries to facilitate business. You can use smart contracts to do that. Maybe what I'll do is I'll kind of give you a better example of how this all kind of works in modern day. Now I want to show you why they're important. Okay, and really it has a lot to do with understanding its use and its use case, because I do think that's where really most people understand how this stuff works. Is smart contracts. When you're the only one making the agreement, there's no need to rely on a broker or a lawyer, right? And basically, when your documents are encrypted on a shared ledger, okay, and then on the blockchain, your documents are then duplicated many times over. It's going to save a lot of money, right? Because you don't have all the intermediaries, all the different companies, all the different people involved in doing contract business, and it's a lot more accurate. It's cheaper, and it's less errors. Without having to fill out tons of forms. Like, it's just another way of facilitating business in the cryptocurrency space. And so I'll give you an example, right? The classic vending machine example. You wouldn't know this, but if you go up to a vending machine and you put $1 into the vending machine to get a Coca-Cola, right? The vending machine has to have a pre-programmed environment inside of it that says, if somebody puts $1 into this machine, give them a Coke, right? Based off whatever button they press. That's kind of a very simple way of doing it, is that the vending machine has a pre-programmed facilitated use that has been programmed into its internal contract, right? It's internally, if something happens, do this, right? And that's a great example of a modern day example. Now, what I want to do is I want to give you a different example. So let's say it wasn't dispensing Coca-Cola, right? Let's say you walked up to a machine and you put in a request to get an ounce of gold, right? And all of a sudden the machine spit out an ounce of gold, right? And the question though would be is, well, what about the gold itself? Like, is it truly gold? Is it truly worth what I put in? Like, let's say you put in $1,000 and it gave you an ounce of gold, right? Well, how do we know that the gold is real? How do we know that the gold is pure? There's a lot of things to do with trust, right? So when you look at it from a vending machine example, it's very basic, right? Like, everybody knows a Coke is a Coke. You go around the world, you put $1 and you get a pop out. But in the real world of business, or in the real world context, it's kind of like putting a bank card into a machine, and the machine gives you back $1,000 because you asked to withdraw $1,000 out of your bank account. Well, the same thing is happening here. Like, there's a level of trust that has to go involved here. And that's exactly what the purpose of a smart contract is that there has to be the facilitation of trust in the intermediary that is built into the process. And so I'll give you an example of where all this kind of comes together. Ethereum is a decentralized platform designed to run smart contracts. So Ethereum can be traded, but it's also a platform in and of itself. And so you've heard of Bitcoin before, and we'll talk about Bitcoin in a second. But Ethereum is actually a decentralized platform that was designed to basically allow people to run smart contracts inside of it, okay? And as stated on their website, the application runs exactly as programmed without any possibility of downtime, censorship, fraud, or third-party interference. And Ethereum has its own custom-built blockchain with a globally shared infrastructure that can move value around and present the ownership of property. Now, this helps developers, right, from around the world create markets, store registries of debt or promises, and move funds around with instructions. And basically, it will eliminate the use of a middleman, right? And so this is an alternative platform to people wanting to facilitate business and create legal contracts for providing, the receipt and delivery of things based on those terms without having to go into essentially, other types of, legal environments, right? And you're probably saying, Sean, how does this relate to trading? Well, we're going to get into that because Ethereum, even though it's a platform, we can trade Ethereum cryptocurrency. Ethereum has its own cryptocurrency. You can trade it, no different than like Apple phones. You have Apple stock, you can trade Apple stock. This is ultimately Ethereum. We can trade Ethereum cryptocurrency, but we can also use Ethereum as a place to build, smart contracts as a platform. And so this is an example of the code and, building, what would go inside. And you're probably thinking, well, I don't really need to learn this. And you're probably right? Like you don't really need to learn this from a day trading perspective. But if, let's say, you decide you want to get into business and you want to use their platform to facilitate business transactions, then definitely you would, right? And as a programmer, this small snippet of code can represent a huge opportunity in terms of a supply of a token. I mean, you could be using it for decentralized projects, wallet compatibility, these types of things. And so the purpose of this is to understand that this lesson on theory is about understanding that cryptocurrency is not just about day trading a chart. Cryptos are day trading the tokens and day trading the coins and investing, but there's so much more going on with the actual blockchain environment itself. It's no different than the stock market. Let's kind of put this into perspective. The stock market is used for people to trade it. It's used for people to invest in the stock market, but really it's meant as a way for companies to raise capital so that those companies can basically issue shares, raise investor capital, and then go out and facilitate business, expand companies, hire jobs, give people work, right? So really, without the stock market to raise funds and go public on the exchange, then how could a company grow and expand? Same thing in the cryptocurrency space and the blockchain technology is how can companies look to expand and do things in a different manner while still being able to participate in day trading and investing and stuff on the cryptocurrency coins themselves. So I just want to kind of bridge that parallel together because there's many different ways to go about understanding this, right? So let's talk about tokenization. The rise of an ICO and the difference between utility and security tokens. We're going to talk about that. We're going to talk about exchanges and how to get your hands on the most promising tokens and what to avoid and token pairs. So let's talk about tokenization. Instead of a company going out and raising money on the New York Stock Exchange and going public, you could actually issue your own ICO and you could create your own security token. You could create your own cryptocurrency coin and you could raise money as a company using cryptocurrency instead of raising capital, say, traditionally on a different environment. And then when you talk about the type of currencies you want to use in the exchanges, well, how do we know which exchanges we should be trading on? And how do we know we should use certain platforms and which coins should we be trading? Which cryptocurrency should we be day trading versus investing in? And how do we get our hands on all that, right? And that's really where we're going to take this conversation moving next. Then we look at wallets, right? Which wallets do you choose? You say, well, what is a wallet? Well, a wallet is a place where you keep your tokens. It's a keep where you keep your cryptocurrency. There's hot storage and there's cold storage, right? Where do you store your cryptocurrencies and what platforms do you use for trading them? So these are the really where we bridge the gap, because in order to truly understand a smart contract, you need to understand that it's really an industry no different than, say, the stock market. The only difference is it's in a decentralized environment. So you can go as a company and raise capital in the cryptocurrency space and use the blockchain technology to keep your capital raising private, and you can do that. You can trade coins and you can be a trader or an investor in the crypto space. You can use the blockchain to facilitate business transactions, and you can use smart contracts to facilitate legal deals. I mean, there's so many ways to do this, which is where we bridge the gap now from just theory into active participation in business and in trading. Okay, so the main goal here is you don't want to miss the bus on all this. It may sound a little bit overwhelming if you're completely new, and if you're saying, Sean, I just want to learn how to trade, perfect. We're going to get there. But let's say you're not just interested in learning how to trade, and you actually want to get a full understanding of how this technology is being adapted and being expanded in the industry. I think it'll remove the fear, it'll give you perspective, and it'll give you the opportunity to be able to integrate, moving forward into an advancing technology and an advancing economy. Okay, so if you have any questions on smart contracts and the bridge lesson here going into ICOs and tokens, let us know, shoot us an email, and we'll see you in the next video. Now that you're a market wizard of Ethereum and all things related to smart contracts, make sure you check out the other videos below because there's a ton of other content in the series you definitely want to take advantage of. Hit that subscribe button and be sure to share this video with a friend so that they can also get results like you. And last but not least, get social with us by asking questions and leaving comments below. We'll see you in the next video.